You have been told your entire life that renting is throwing money away and that buying a house is the single smartest thing you will ever do with your money. Here's the uncomfortable truth. Both of those statements are half lies, and believing them blindly can quietly cost you a fortune. Two friends, same age, same salary. One rents for the next 10 years. The other buys a house tomorrow. Most people are absolutely certain they know which one comes out ahead, and most people are wrong. So let's throw out everything the culture taught you about this and look at the actual math, because the answer is far more surprising than renting bad, buying good. Let's start with the phrase that has bullied an entire generation into panic. Renting is throwing money away. You've heard it from your parents, your co-workers, that one uncle at every family dinner, and it sounds obviously true. Why pay a landlord when you could be building equity? But here is what nobody tells you. Buying a home throws a massive amount of money away too. We just call it by different, friendlier names. When you own, every single month you hand money to property taxes and it's gone. To homeowners insurance, gone. To maintenance and repairs, gone. And the big one, mortgage interest, gone. None of that builds a single dollar of equity, it just vanishes, exactly like rent. So the real question was never renting versus buying. It's which pile of unrecoverable costs is actually smaller, and the answer will genuinely surprise you, because here's the trap almost every buyer falls into. They compare the rent to the mortgage payment and stop there. Rent is $2,000, the mortgage is $2,200, so buying is basically the same, right? Wrong, and it's not even close. The mortgage payment is only the beginning of what a house actually costs. Once you add property taxes, insurance, and maintenance, the true monthly cost of owning runs 30 to 50% higher than the mortgage payment alone. That $2,200 mortgage is really more like $3,000 once the house starts sending you all its other bills. On a typical $420,000 American home, property taxes alone run around $4,000 to $5,000 a year. Maintenance eats roughly 1% of the home's value every single year, another $4,000. The house is not just a purchase, it's a hungry machine that bills you every month for the rest of your life. Now let me show you the part that feels almost like a scam once you understand it. When you take out a 30-year mortgage, you assume your monthly payment is steadily buying you the house. It isn't. In the first 5 years of that loan, roughly 70 to 80% of every payment you make goes straight to interest, not to owning your home. Let that sink in. For years, you are essentially renting money from the bank and barely chipping away at what you actually owe. People love to say renters are paying their landlord's mortgage, but early on, homeowners are mostly paying the bank's interest. You're a renter too. You're just renting from a bank instead of a landlord and paying a lot more in bills for the privilege. So how do you actually cut through all of this without a spreadsheet and a headache? There's a beautifully simple tool for it called the 5% rule. Here's how it works. Take the value of the home you're eyeing and multiply it by 5%. That's roughly the true unrecoverable cost of owning it for a year. That 5% breaks down into about 1% for property tax, 1% for maintenance, and 3% for the opportunity cost of your down payment, the money you could have invested elsewhere. Divide that number by 12 and you get the monthly cost of ownership that you will never get back. Now compare it to rent. If you can rent a similar place for less than that number, renting is very likely the mathematically smarter move. On that $420,000 home, 5% is $21,000 a year, or about $1,750 a month in pure unrecoverable cost. If a comparable home rents for less than that, the renter is quietly winning, even though everyone at the dinner table swears they're throwing money away. If this is already flipping something you thought you understood, do me a quick favor and subscribe. This channel breaks down the money math that school skipped every single week in plain language. Now, let me be fair, because this cuts both ways. I am not here to tell you renting is always better. That would be just as much of a lie, because buying does have two powerful advantages, and honesty demands we look at them. The first is forced savings. When you pay a mortgage, a slice of it, small at first but growing every year, does eventually build equity. Most people are terrible at saving on their own, and a mortgage quietly forces them to do it. The second is appreciation. Over the long run, American home prices have risen roughly 3 to 5% a year. Combine those two, and over a long enough timeline, buying usually wins. But notice the key phrase, long enough timeline. This is the piece everyone ignores. Because of closing costs, which run 2 to 5% to buy and another 5 to 8% to sell, buying and then moving within a few years is almost always a financial mistake. In most markets, you need to stay put for around 5 to 7 years just to break even, and in expensive cities, closer to 10. Buy a house and move in 3 years, and you will very likely lose money, no matter how much the culture cheers you on for getting on the property ladder. So let's go back to those two friends from the beginning. Same age, same salary. Picture Tanya, who chose to rent a modest place and quietly invested the giant pile of money she didn't spend on a down payment, closing costs, taxes, and repairs. And picture Marcus, who stretched to buy the biggest house the bank would approve, then got a job offer in another city 3 years later, and had to sell, eating tens of thousands in costs before he ever built real equity. On paper, everyone assumed Marcus was the responsible adult, and Tanya was throwing her money away. The math tells a completely different story. Tanya isn't behind, she's just winning in a way nobody can see, because her wealth is in an investment account instead of nailed to a foundation she might have to leave. Here is the real lesson, the one that survives contact with an actual calculator. Renting is not throwing money away, it's paying for flexibility and freedom from a house's endless bills. Buying is not automatic wealth. It's a powerful long-term bet that only pays off if you can afford the true cost and you stay long enough to outrun the fees. The right answer isn't rent or buy. It's honest math about your timeline, your market, and what you'd actually do with the money you save. The people who get rich with housing aren't the ones who bought because they were told to. They're the ones who ran the numbers first and then either bought the right house at the right time or rented without an ounce of guilt while their money grew somewhere else. So the next time someone tells you that renting is throwing money away, you'll know the truth. Every roof over your head has a cost you never get back, whether you rent it or own it. The only question that has ever mattered is which one costs you less, and what you do with the difference. So tell me in the comments, are you renting or buying right now? And after hearing this, do you think you made the right call? Be honest, because someone reading your answer might be about to make a $400,000 decision based on a myth. And if this changed how you see the biggest purchase of your life, the next thing worth understanding is how the loan behind that house actually works. So the bank stops quietly winning without you even noticing. This video is for education and entertainment only and is not financial advice. Always run your own numbers and speak with a qualified professional about your specific situation.